There's finally competition to BSE and the NSE as MCX SX has finally got the SEBI nod to launch an equity trading platform. This has been in the works for a while now, and after the Supreme Court intervened, the regulators finally cleared the proposal. Remember, the Supreme Court had set a deadline to SEBI to take a final decision. The deadline expired today, and just a short while ago, we understand that final clearance came through from SEBI, and now MCX SX can indeed start an equity trading platform. There are plenty of riders and largely along expected lines. And we've got Ashwin Mohan, who's been on top of that story, joins us live with more details on what the riders are. Ashwin, I guess the market was anticipating that that MCX SX would get this clearance, but more importantly, what are the riders that come with this clearance?
Sandeep, you're right, because if you look at the counters of MCX SX and MCX and FTIL over the past 3 weeks, they have risen by 12 and 13% respectively, anticipating this much-awaited nod. So therefore, looks like the nod was well on lines as far as SEBI is concerned, and that was expected. And today, officially, of course, SEBI has come out with an official statement, and MCX SX has also issued a release in that regard, saying that they have got that much-needed nod. Now, quite significantly, they've got nod not for one segment. They've got nod for 4 segments: the equity segment, the F&O segment, the interest rate futures segment, and the wholesale debt segments. But yes, what are the riders? Recently, SEBI had come out with a new set of norms for shareholding as far as stock exchanges are concerned. So there are 2 clear-cut riders as far as this approval from SEBI is concerned. Number 1, the promoters of MCX SX, that is MCX and FTIL, will have to reduce their shareholding to the prescribed cap of 5% within a period of 18 months. So that's the number 1 rider. The second rider, of course, is the entire issue of warrants. Now, SEBI had an issue with the warrants being converted into equity. That played a major role in MCX SX being denied permission for all this while. And what SEBI has told MCX SX is that the second rider would be to deal with the entire warrants issue within a period of 3 years. So there are 2 time frames that SEBI has given to them as far as this nod is concerned: reduce your shareholding within 18 months and take care of the entire warrants issue within a period of 3 years. So those are the 2 main riders coming in from SEBI.
Ashwin, the market was probably expecting that that SEBI would give MCX SX 3 years to trim the shareholding, because we're talking about a significant change in shareholding pattern. What you're saying is that MCX SX has only been given 18 months to fix the shareholding. What's the reaction from MCX SX to that?
Well, as of now, MCX SX is definitely thrilled, because they feel that with this nod coming in from SEBI, there will be a level playing field as far as the entire equity trading platform is concerned. Now they will get a chance to pose a serious challenge to the likes of BSE and NSE. Though keep in mind, Sandeep, that even though that MCX SX has got the nod today, what market experts are telling me that it will take a period of at least 3 to 5 years before MCX SX can come up with any sufficiently high trading volumes and pose a serious threat to BSE and NSE. But yes, let's look at the time frame given to them. According to the recent norms that were announced by SEBI, every exchange would get a period of up to 3 years to comply with the minimum shareholding norms. Now, MCX SX hasn't been given 3 years. What they have been given is 18 months, which is half the time frame. So therefore, from that point of view at least, they may not have got the longer time frame that they were expecting from SEBI, but nevertheless, they have got that nod which they were waiting for a long time, and that, of course, will be the biggest takeaway as far as today's statement from them is concerned.